Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today is a good day. It's on a Wednesday. There is a lot that's currently happening in the markets. So we'll be tackling that first before we get onto the economic calendar. And at the same time, we also look at the key technical price patterns. So welcome, everyone. Hello, Heisenberg, Nick. I can see FXEK. Good morning. Let's see what's currently happening in the markets. So first things first, the debt ceiling has been the main topic for the entire month, and I think last month too. So today being the last day of the month, we know that we're expecting that the debt ceiling deal will be passed. So yesterday it passed a major hurdle, basically going through Congress. So just one more step before this is implemented. So as I've been mentioning over the past couple of days, it's a scenario where we see people buying the rumor and selling the news. So the fact that this is being confirmed, so instead of the market rallying, the market already rallied before. So this was already priced in. So we are seeing the opposite effect in the markets. So besides this, there's also the issue of currencies performance. So I always try and do this. So over the month, that is month-to-date performance of all the major currencies, you can see that the strongest currency has been the US dollar this month. So all these other currencies have lost against the dollar, with the Canadian dollar losing the smallest percentage, whereas the euro has been the strongest currency against the US dollar. So as you can see clearly, down 3.11% for the euro, New Zealand dollar 2.97, Japanese yen 2.49, and Australian dollar 2.08, Swiss franc 1.88, pound 1.62, Canadian dollar 0.76. So clearly, you can see that the overall performance has been a very strong dollar this month. So on to the map. Hopefully, you can all see this. Okay, let me try and share again. So just a moment. Yeah, this is the month-to-date performance, with the euro being the biggest loser against the dollar, New Zealand dollar, Japanese yen, Australian dollar, Swiss franc, the pound, and also the Canadian dollar. So all these currencies have been losing to the strong dollar. So that has been the story of the month. So if you've been buying the dollar, congrats. I hope you made some good profit over the month. So on to the maps, we can see the performance of the S&P 500. So yesterday, it was quite a volatile day. So we all know that year-to-date, tech and communication services have been the top performing sectors in the S&P 500. So yesterday, Netflix rallied 3.72%. We had a good performance from Amazon, Tesla, Nvidia, and Qualcomm. So Qualcomm was up 5%, whereas Apple was up 1.07%. So if you look at the 1 month performance, that's basically the month of May, then you can see most of these other sectors have been losing, save for the two major sectors here, which is a tech sector, communication services, and of course, under consumer cyclical, we have Tesla and Amazon making some good performance. Tesla being up 22%, Amazon 15%. So in communication services, we have seen Meta up 9.24, Netflix 19%, Google 15%. And then in semiconductors, this is where we have the most volatility, with Nvidia rallying 44% over the month, AMD 40%, Broadcom 28.23%. Then in the tech sector, it's all green. Everything has been going up in the tech sector. So year-to-date performance, this is since the beginning of the year. It's very clear that the number one winner across board is Nvidia, which is up 174%. AMD is up 93%, Microsoft 38%, Amazon 44%, and Tesla 63%. So these are some of the key highlights for the year. So everyone is crazy about Nvidia, save for Cathy Wood, who missed out on the opportunity by selling her Nvidia holdings under the ARK Invest index. So on the currencies side, if you look at the economic calendar, we had a speech from RBA Governor Stephen Lowe. So he basically mentioned that going forward, the central bank policy will be majorly data dependent. So far, he is very confident that the current interest rates in Australia are in a restrictive territory. So they're not looking to make any major rate hikes in the near future. So besides these, we had retail sales coming in from Japan. They slowed down to 5.0%, and also industrial production slowed down to negative 0.4%. So both of these data points missed expectations. Then going forward, we had Australian CPI data. Inflation year over year rose to 6.8% from a previous 6.3%, indicating that the inflation in Australia is getting sticky, which means at some point the Reserve Bank of Australia will be forced to continue tightening policy in order to make sure it gets back to 1 to 3% target rate. So going forward, we had construction work done in Australia on the higher side at 1.8%. Private sector credit improved by 0.6%. Then we had Chinese data. We can see that Chinese manufacturing is really slowing down. It was down to 48.8, whereas services sector slowed down to 54.5. So earlier in the year, we had a lot of optimism from Chinese recovery, especially after they removed all COVID-19 restrictions. So a lot of investors were betting on a boom on the Chinese economy, especially Chinese stocks. However, this is beginning to slow down. You can see manufacturing PMI has been slowing down for quite a bit now. And this is becoming very concerning for investors. So as a result, we saw a big drop, especially in the Hang Seng Index. So the Hang Seng Index officially entered a bear market territory today by basically dropping by 20% since the most recent high. So try and show you the chart. So this is the Hang Seng Index, abbreviated HK50. So if you basically compare the most recent high and the current price action, then you notice the conclusion. So from this high to this low here is down 20.36%. So the moment you see a stock market index down 20% from its most recent high, then it's easy to conclude that that market has entered a bear market. So for Hang Seng Index and other Chinese equities, they are officially in a bear market territory. So this means it's in order to start looking for short selling opportunities. So clearly, we had one very nice chart here that made a break out of this particular pattern. So this was the support that was holding on quite well before the market broke to the lower side and dropped last week and also this week. So any kind of pullbacks might be very interesting, especially to look for short selling opportunities. So the most recent low was around here. So this was the most recent low, 18,824. So if we were to get a good rally coming from this, then the idea is to look for short selling opportunities around 18,824. So the most interesting chart as per my analysis since the beginning of the day seems to be the Euro 50 index. So from the daily chart, you can see it's a market that was very strong on a very good rally. Then last week, we saw German GDP coming in negative second consecutive quarter, which basically confirmed that Germany is officially in a recession. So after seeing this data on the 4-hour chart, we had this double top formation before the market bounced and went up higher. And now you can see the market dropped all the way back to the neckline. And immediately after getting to the neckline, there was a very nice bounce. So for now, it seems like a very good bounce to look for bullish positions. The 1-hour candlestick was pretty strong in rejecting the support. So perhaps we will be seeing some further upside on this chart. However, the most interesting idea is now focusing on the new trend, which moves from the most recent high, the previous high, to the most recent high of last week. So if the market was to get to the upper trend line, then there's a good chance we could be seeing something along this dimension, and then the market continues going down. So for now, it seems like the bullish momentum is up. So perhaps the 1-hour candlestick is a clear indication that we could be seeing some further upside momentum happening from the Euro 50 index or the Euro stocks. So For the UK 100 or the FTSE, it's still on a bearish momentum. So from the forward chart, we can all see the sharp drop that happened after breaking this sideways range that was holding for 4 weeks. So after breaking, there was some form of pullback, and then this week has been completely bearish. So a lot of bearish momentum has been happening here. So clearly, on the last 1 hour, it seems like the market is pulling back. So I wouldn't be interested in looking for bullish positions. But if the market was to track back and retest the area of 7,557, then this would be an interesting area to start looking for short selling positions in continuation of the trend. So from the daily chart, it's a very sharp bearish momentum. So you can see the last number of days and how it has been moving downwards. So if there was to be some form of pullback, then I'll be looking for short selling positions. So the dollar index managed to make a very strong recovery this morning, breaking the previous high that we had seen yesterday. And if you go to the daily chart, you'll notice that the last time the dollar index was trading here was some time back on the 15th of March this year. So this remains a very strong trend. So as long as the dollar keeps on strengthening, then we know what to do with all the other major pairs. So for pound USD, managed to make a good rally here, and now it's dropping back downwards. So the very short-term target seems to be 1.2331, which is basically a support level that we identified some time back. So there is a good chance we'll be seeing the market drop to this trend line here at 1.2331. So for New Zealand USD, a very sharp drop. We managed to break a major support level on the daily time frame. So this was the support level, and since then the market has been pushing down since. So on the forward chart, the breaking, the market traded sideways for a while. So from the 1 hour chart, you can see that the market was doing a triangle. Before it broke, went back, played around this area for a while before making a sharp drop early in the morning today. So for USD CAD, I remember we've been following this closely after the formation of this triangle. So we had a break, a retest, and a continuation, and then the market started trading in a flag. So I remember yesterday identifying this flag here. So we did this on the 15 minutes chart. So this is how it was looking. And we said that the best trading opportunity would be on the breakout of the flag. So this happened in the evening. Market pulled back and played around here for a while before making a run for the top of the pattern, which seems to be 1.36540. So 1.36540 is the price, or the highest price here. So now the rally continues. I expect in the next couple of minutes, or even in the next 1 hour, the market will eventually get to this target level. So once you get to the target level, then we'll be observing this area to see whether there will be a break or whether there will be a bounce of this resistance. So as per now, the flag has played out well. So I expect this leg to be longer, but everything has to be based on patience, waiting to see what price does once it gets to this level. So as for USD JPY, the dollar remains strong. So despite having a strong break earlier this morning, which was indicative that price is going down, what we are seeing here is the market making a very strong recovery over the last 2 hours. And now it's pretty interesting to observe what happens with price around this area. So remember, the Bank of Japan and the Ministry of Finance in Japan had a meeting yesterday, and they made a threat to intervene in the markets if the Japanese yen keeps on losing against the dollar. So as per now, it remains uncertain. So we know what the Bank of Japan does. If their currency is really weak against the dollar, sometimes they may intervene and cause the Japanese yen to strengthen. So this is the same case that happened last year when the Japanese yen had really lost against the dollar. And from there, after they intervened, we managed to wipe out like 50% of the gains that we had made on the year. So if I was to zoom out here, the year had started around here in January. So we made a very good rally, and the top was hit around October. But between October and January this year, there was a big drop, basically the Japanese yen regaining against the dollar. But since the fundamentals remain the same, and the US dollar keeps on strengthening as a result of the Fed tightening policy, then we are seeing this impressive comeback happen. However, this is worrying the Japanese people. So there is a good chance that if they intervene, we'll be seeing some further downside. However, as per now, it remains a very strong bullish momentum. So from the 4-hour candlestick and what we are seeing here, there is a good chance we'll continue seeing a strong rally in USD JPY currency pair. So it's very important to observe what happens here, especially that we have reversed this move here. If the market goes down, then it's basically an assumption that the market broke the trend line, retested, and now continues back downwards. However, if it proceeds and gets to 139.955, then in that case, we might consider it's a full burst recovery, and we might be targeting the previous high at 140.9. So as for gold, we eventually hit our target. So this was our triangle, the fake out on the lower side, and then a very strong rally. Then the market did not get to the target. So it kept praying here yesterday in the evening, but this morning we eventually go to the target of 1964.57. So immediately after getting to the target, the market pulled back downwards. And now, if you use a smaller time frame, such as the 15 minutes chart, then you'd notice that something peculiar is happening on the chart of gold. And it seems like we're entering some form of consolidation that basically looks like a flag. So from here, we might be able to identify potential trade based on how gold breaks either of these two trend lines. So we have our support here. So try and adjust this properly, fit all the points. So this is what we have in gold. It's on a 15 minutes chart. So we will be tracking these two trend lines. So right now, as we speak, it's a bounce from the lower trend line. So it might make sense to assume that we are headed back towards the upper trend line. So a very short-term intraday play would be back to 1964, but a better trade would be to be patient and wait for gold to break either of these two trend lines. So if it breaks higher, we trade higher. If it breaks lower, then we trade lower. So AUD/USD is strongly bearish. So I think we haven't checked this yet. So we had sideways momentum and then a break area this morning, and it seems like the market is continuing further downwards. So from the daily chart, it's almost like a falling knife. So it doesn't make sense to catch it. So it only makes sense to continue trading short positions on AUD/USD. So for now, after the sharp drop, I would wait for some form of pullback before attempting to go for an additional short trade. So for SP500, we opened with a gap. The market kept pressing down lower, and today also kept going down, but it seems like it's making some form of recovery. So same case with the US Tech 100. So opened with a gap on Monday, made a rally yesterday before pulling back down, and today seems to be bearish. So from the daily time frame, you can see this is the first time in a while that we are seeing a candlestick that is indicating an entry of sellers. So if today we close lower, then it will be a confirmation that the Nasdaq is now pulling back downwards. So for now, we don't know yet. So if we happen to see one big candlestick, such as the green one, dropping, let's say, all the way down to the open of the previous one, then that would be confirmation of a reversal. So for now, it's only low volatility that we are seeing, but it doesn't imply that we are going back downwards. So the close of the day will be very important in determining the direction of the Nasdaq index. So the Dow Jones seems to be remaining within this pattern. So yes, we have to keep adjusting the trend lines, but the pattern remains the same. So we are still seeing some further downside happening around here. So it's a bearish wedge. So the break outside of this bearish wedge will make sense to look for trading opportunities. But for now, it doesn't make sense to look for a position in between. So I would be looking for a trade if the market gets to this upper trend line, or a trade if the market gets to this lower trend line. So the most bearish chart for the day seems to be the Brent oil chart. So clearly, a very big sell-off. So if you look at the size of the sell-off since yesterday, it seems like the market has been down about 5%. So having dropped sharply towards the bottom of this pattern, it seems like the market has already hit its target. So there was a bounce yesterday in the evening. So today, another attempt to go lower, being faced by a reversal. So maybe oil is finally getting some support, and this could be the area to start looking for bullish positions. perhaps the market could rally back to the breaking point. So this might be an interesting trading idea. So as we all say, this is not trading recommendation, neither is it investment advice. So always do your own due diligence and practice proper risk management. So I can see quite a good number of comments here. So let's see. Morning, Rodney. The currency meter, I already did that. Logged in from Las Vegas. Thank you, guys. Hello, Team Nakuru. So there was a request to check on DXY gold. I think I've already done that. So the RBA has basically mentioned that it's not going to hike interest rates further. So it makes it very weak. Even if inflation is rising, the central bank is not looking to tighten further. So that's very bearish for the Australian dollar. So WTI weakness is as a result of the manufacturing PMI that I showed you earlier. So the fact that Chinese economy is weakening in terms of manufacturing, then it basically means demand for oil is weaker, which basically means lower oil prices. A very good question. Do you trade all these pairs? No, this is purely for presentation. So I focus on a wide range of assets so that if there's any opportunities and I get to try to get as much coverage for you guys as possible. So if I only presented what I trade, a lot of guys would miss out. I think I've already gone through Euro USD. So there's a question on pound yen. So last part of the presentation today will be on the economic calendar. So the key highlight for the day will be Canadian GDP. This will be at 3:30 p.m. Also, we'll be looking at the ECB Financial Stability Review. I think it has already been released at 11 a.m. So we'll be looking deeper to understand what it means. Then towards the end of the day, we'll look at JOLTS job openings at 5 p.m. Then a speech from SNB Chairman Jordan. This will be at 6:05 p.m. Then two speeches by FOMC members, Haka and Jefferson at 7:30 and 8:30 p.m. So tomorrow will be pretty interesting. It's a public holiday. The markets will be open. So if you're looking to trade, you should know that the holiday is only local, but it doesn't affect the markets. So the volatility and of course, the functioning of the markets will be completely normal. So remember to keep preparing yourself for the non-farm payrolls on Friday. We expect a lot of volatility for the week to be happening on Friday at 3:30 p.m. So thank you very much, guys, and I hope to see you on the next session. Thank you, Job.